Welcome to Whitefield Income's FY2026 Shareholder Update. I'm Monica Knight and I'm joined by Chairman Angus Gluskie and Executive Director Will Seddon. Angus, despite challenging market conditions, the Whitefield Income portfolio's delivered some strong results. Let's start with income generation. Whitefield Income, from a gross income perspective, delivered 10.1% on asset backing. That's a pleasing result.
Yes, it certainly is. The company's strategy will generate reasonably consistent income levels regardless of economic conditions. And the 10.1% income that was generated across that 12 months is reasonably consistent with the 10.7% per annum that the strategy's generated since its IPO.
And how did it perform from a net profit after tax perspective?
So net profit after tax for the full year was $16 million, and that equates to 7.85 cents per share.
Okay, and a key focus for shareholders is obviously income, or the income they receive. Tell me about dividends.
Yes, so the company's paid base monthly dividends at the rate of 0.583 cents per share across the full 12 months. And we're continuing that base monthly dividend rate over the next 3 months through to September. In addition, though, we have determined to pay a further 6 monthly top-up dividend of 0.3 cents per share. And that top-up dividend will be payable in September in conjunction with the monthly base dividend. So in aggregate, if we look at the combination of base monthly dividends as well as the 6 monthly top-up dividends, plus the franking credits, those dividends now amount to 9% of the underlying asset backing per annum. And of course, all those dividends are fully franked.
Thanks, Angus. Turning to you now, Will. Beyond income and dividends, how did the portfolio perform from a total return perspective over the last 12 months?
So the portfolio delivered a 6.6% return after all expenses and including franking, and that was 0.2% higher than the equal-weighted ASX 300 benchmark. Looking more specifically at that second half of the year, it was a very difficult time in markets for all investors because markets were attempting to make sense of a lot of complex events in the Middle East. So we're quite pleased with how the portfolio has sailed through that period.
And during periods like that, what aspects of the Whitefield Income investment approach start to become more important?
So the strategy is heavily focused on profitable companies generating strong cash flows and paying dividends. And that means that we're always investing relatively sensibly, even if markets are being distracted by complex or noisy influences like what we've just seen.
Mm-hmm. And so how's the portfolio performed broadly since listing and since the strategy was established?
Since listing, the share price return plus dividends including franking amounted to 10%, which is quite solid considering the benchmark returned 5% over that same period. And then going back the full 5.5 years since the strategy was incepted, the portfolio after all expenses and again including franking delivered an 8.4% return per annum. And again, that was a solid margin ahead of the benchmark.
Back to you, Angus. The June capital raising was very well supported. What other benefits from a shareholder perspective of that additional scale? And also, what does that investor demand say about the company?
Sure. The company raised $108 million in June 26 from existing as well as new shareholders. And that issue was very well supported, suggesting to us that there's a very high ongoing level of demand for the company's shares. The scale of the company now sits at around $400 million. And look, that size just helps the company continue to keep its operating expenses relative to asset backing at an efficient level.
Okay, thank you. Thanks for joining Whitefield Income's FY2026 Shareholder Update. For more information, visit the website whitefield.com.au.